28th, man, it's going to be an awesome day, guys. Sometimes the simplest trades, they're the best and easiest trades. Hey, congratulations to those of you guys that took the Shopify trade. Damn it, that was an awesome trade. 500+% returns, guys, in just a matter of 24 hours. Yes, swing trade. It's that easy, guys. Keep the positions overnight for a swing trade. And, man, boy, what's about to happen, guys. There's a couple more easy trades I'm going to give you in this 13 Market Moves Daily today. But the question of the day is this. Are you ready? Are you ready for the markets to hit all-time highs? So here's the main observations from June 27th and some of the pre-market action this morning. So the panic clearly is decreasing. So there are instances where the VIX just tries to spike to a level 16.6, 16.5, and it fails. And yes, it fails again yesterday. That tells us going into this G20 meeting, especially we've noticed that the market really struggled to break above that level, specifically after the Micron earnings announcement, because Micron just went out and said, hey, things in China ain't really that bad. It's really not hurting us that bad. So the crazy low multiple in Micron and now has been accelerated and hit another high yesterday. I mean, the stock was just at 30 a couple of days ago. Now it's hitting 38 plus. Yesterday, we're going to take a closer look at that in just a second. But the most important thing is that is propelling a ton of stocks higher. And some goofy news like one of the designers leaving Apple. Apple tanks a couple of dollars after hours yesterday. I'm sure you guys noticed that. And then it's up again above $200 mark. So when things like this, when negative news hit the companies and they continue bouncing, guys, and when we keep seeing it in many, many different sectors, it is buying the dip type cult behavior that is going to continue. That tells us, look, they're not that concerned with G20. As a matter of fact, the whole week we're seeing institutional buying behavior. They keep buying, they keep accumulating the shares. And that tells us, even if there is going to be a slight dip Monday, they are going to buy this dip. More and more sectors are actually joining this buy the dip behavior. And that tells us that the markets are just about to hit all-time highs that we have ever seen in the history of the United States market. And the reason I'm so excited is because after we hit all-time highs, there's going to be a magnificent drop. And we're going to work extra hard to time that. But for right now, the strategy in town, the only strategy in town is buy the damn dip. So yesterday we mentioned that it was a good idea to buy the dip at 29.20, 29.30. And so for those of you that took action, congratulations. The markets are moving above the area we have identified in the prior few videos, that area of 29.36. 29.36 is the number. If we maintain above that number, guys, this breakout next week could be unbelievable in the market. So we're definitely adding more calls today. We're definitely not spending our whole accounts on doing so, because it would be wise to actually add more at different levels on Monday and Tuesday. Now, clearly, if we just get a home run right out of the ballpark, the market gets up higher on Monday. This is going to be a wonderful trade. But just make sure, guys, time and time and time, I get traders that get excited, that just invest their whole accounts. Do not do that. You gotta split up your account. You gotta position yourself. You know that the way that we encourage everybody to do is by stair-step approach. In other words, don't jump out, buy one whole big position, not all at once. Leave some room in case you need to be adding to that position over the course of a day, 2 days, 3 days. If you're building a position that's a swing position, you're trying to maintain it and until the position clearly starts going your way. So Nike calls. Nike is another stock that they're buying on the dip after Nike actually misses on earnings. It beats on the sales number. It misses on earnings. It drops like a rock. They buy the dip immediately. So we've seen clear parallel between the FedEx and the Nike and so on. And with that said, all the retail stocks are going to be rallying higher. All the semiconductor stocks, now they've confirmed a move higher for 2 days in a row. We think there's going to be a third day higher and ultimately maybe possibly 7 days higher in a row. So all these semiconductor stocks. Now I've got a few tickers here. Guys, clearly just take your pick. You shouldn't be buying all 4 or 5 of these, right? So ASML positioned nicely. The chart looks really good. NVIDIA, AVGO, LRCX, all of these, they're semiconductor chip stocks. I mean, they will move higher. Okay, and clearly you can't figure out, okay, well, this one's going to move by $15. This one's going to move by $5. Just pick one. They all have equal probability of moving higher in this type of market environment. Specifically, this is a MU correlation type trade. So as long as MU keeps moving higher, all of these will move higher. We don't want to trade MU because it's cheap stock in the 30s. We want to trade all of these names. They trade at least 160, 200 bucks. Now, Shopify is just another crazy stuff that we've talked about. Congratulations to those of you guys that jumped on this trade just a day ago when it was in the 280s. The stock is pushing 304 this morning, and it's likely to revisit its highs next week at 337. Yes, I've seen this time and time over, guys. When institutional investors after a particular stock, this drop in Shopify that happened rather quickly over a couple of days, a few days ago, it happened on low volume. And they came in, they started buying the dip. And I'm going to show you again another good example, because this is indeed a great example, how things really look when they're buying the dips. So Amazon is lagging. I know a lot of you guys, including myself, are freaking frustrated with this Amazon trade. It just doesn't seem to get enough traction. But one thing I've learned over the years trading Amazon is they could be accumulating shares on this low volume, and all of a sudden you get a huge breakout higher. So I think easily Amazon can actually hit some substantial levels higher today. Maybe 1930, 1950 could be in the making for the stock. And if we hit 1950, I mean, we can easily break above 2000 level at some point next week. So the trade is very much valid. I am buying some more, adding some more Amazon calls today that expire actually for today, actually expecting maybe a $30, $40 move higher. So if you're looking for a nice and easy and a quick trade, I'd say stick with Shopify, buy some Nike calls. Just make sure you understand Nike does not move as much as, a lot of these other names here. So, buy in the money. Don't expect like a $10 move. Just expect a couple of dollar move. But with that, depending on what the options are going to be priced this morning, you can still make 200-300% returns on these Nike calls. Okay, here's the most important thing I wanted to bring your attention. This is the calendar, guys. And if you're not doing that, okay, you're supposed to be doing this. You're supposed to be grabbing a blank calendar, and you're supposed to be writing down these moves each and every day so you could have a bigger overall picture of what's actually taking place in the market. So if you've taken the 13 markets move formula course, it tells you specifically that this is what you should be keeping track of daily. So the first number is clearly the number of the move. The numbers underneath that, they are the VIX ranges, where VIX starts out, the highest for the VIX of the day, and where it basically ends for the day. So observing this, I keep referencing the sequence, so I figured, hey, why don't I just put this slide in here and show you exactly what I'm looking at, guys. So this sequence of 11 to 11 that happened roughly a couple of weeks ago, this was a highly bearish sequence. After this, we could have dropped 1,000 to 3,000 points. But we didn't do that because VIX, look at the VIX ranges here, right? It hit. The reason we're coming up with this 16.53 number is, remember, that was set on the 10th of June, 16.53 number. And since then, we've been around that number. As you can see, when we made the move too, we were at 16.7, which was the highest of VIX for the day. On the 12th, we were at 16.41. So if you average the 16.7 and 16.41, you're going to get the 16.53, which was the average of the VIX on those 3 bearish days. And they're highly bearish days. In their formation, this move would be equivalent to the move of a 666 or a 611.6, 11.611. So all of these, they're very much dangerous sequence. And in the past, they've produced some ridiculous drops in the markets. So the question is, why didn't we get this huge drop now? Is because the VIX has failed. So a question somebody was asking in the chat room was like, well, okay, well, hold on. Why are we buying calls? Because the bet that we're making, guys, is the fact that this sequence failed to break out, with the VIX failing to break out, did not produce a drop. Therefore, this sequence, which also looks highly bearish, if you just close your eyes on this move 5 for a second, you get a very similar sequence. It's 11-2-2. Well, we're running into the same circumstance, right? You got the VIX, here was in the 15th, and in these 2 days, 16.68, 16.59. So the VIX is doing exactly the same thing. It's failing to break above. And we know in the recent history, this is what it results in. After this sequence of 11 to 11, highly bearish again, but with the VIX failing to break out above the 16.53 level, what do we get? We get 1, 2, 3, 4, 5, 6 green days in a row. So if we're using this analogy, 11, 2, 2, basically, skipping the 5 here for just a second for illustration purposes, okay, we could be going into 7, 1, 7, 1, 5, and so on. So we could be getting, basically, I'm saying we could be getting multiple consecutive days higher, beginning with today. Well, we started that yesterday. Yesterday was a 7, was a buying the dip, classic buying the dip type behavior move. And today, I like to, in the morning, guys, this is what I do. I like to go in and kind of put my main projection for the day. So I think it's 1, but if you look at the history and if you maintain this calendar, like each month, you're going to be able to go back and see we are clearly assigning the probability of a move 11 as well. As you can see, last Friday we had an 11. So these are Fridays. So if I was to pull up a bunch of slides of all the Fridays over the last, especially in May, most of the May moves on Fridays, about 70% of them were move 11s. So for whatever reason, Friday has a higher probability of a move 11. Clearly, it's switching. This behavior is switching this month. But if we're to summarize last 10 Fridays, the highest probability move for a Friday has been a move 11. So just keep that in mind. So it's between 11 and a 1 today. We think it's going to be more like a 1-7. It's going to be more like a bullish move today. But this is why we're buying calls. Okay, so if you guys are not maintaining, I would love for each one of you to just have this blank calendar on your desk, at your office, at your business, at your house, wherever you guys trade. Most of the time, just have this calendar so you can keep looking at these VIX ranges, so you can keep telling yourself, okay, I see why we're buying calls, because this sequence just happened. It has failed because the VIX has failed. So if we use this analogy, this is what's about to happen. Okay, so these observations are highly crucial, because on days where the market just looks like it's going slightly lower, naturally you're going to want to buy puts. And so I understand the question, why we're buying puts when we're getting consecutive move 2s. Well, because we're about to transition into a highly bullish environment. And who knows how long this bullish environment is going to maintain itself. Could be for a few weeks. So going back to our analysis of the Micron buying the dip that started after hours, FedEx after hours from a few days ago. So we're getting, the next day, we're getting these both stocks to move higher. And those calls that we're buying for 40 cents hit a level of $2. Well, that didn't stop there, guys. Okay, they actually hit a level of 4.5 yesterday, and they produced 900%. Now, still holding some of those. It's a good idea when you guys are up 900% on the trade to at least close half of your position and still keep half. I know we send out a message to buy some more around this 162, 163 level, so we still think FedEx could easily move to a level like maybe 165, 166 today. But however, it could stall, like it could trade maybe between 163 and 165 kind of level without a huge further move. Now, overall, we still believe what we said the other day is basically FedEx could continuously move higher over the course of the next couple of months. When these stocks set these lows and they're buying, it's important to understand, okay, when these buying the dip behavior happens, after the stocks have been bid up severely, how long is this move higher going to continue? So when you get a situation, and this is the main reason why we're reviewing this, when they buy the dip and the stock continues to go higher the next day, one day up, that's important. When you get a second day up and they're still setting highs in relation to, meaning like recent highs, not all-time highs, okay, that is something to take observation on. If they make a third day move higher, that actually tells you that there is a huge probability that these stocks will continue rocking on higher. And so you want to position yourself. You don't want to be a bear. You want to make these observations 3 days higher in these beat up sectors. Tells you exactly what the market wants to do, and the market wants to go higher. Now, surprise, surprise, last night, Nike reports earnings. And what do you see, guys? You should be sick and tired of this by now. I hope you are, because this is buying the dip. Anybody should be able to look at any chart, aftermarket, pre-market, after hours, minute, and see this. So Nike misses on earnings. It drops like a rock all the way to the 79 handle, then bounces immediately. Like, look, there's no lag. I mean, it drops and bounces right away. So far, pre-market is trading like around 83 bucks. So I think it's a good entry to come in, buy it. Maybe it'll pull back to like 82.5. So buy it between 82.5, 83. Buy the 80 or 82.5 calls. 85 calls could be a bit risky, but with an ultimate move like this thing can move easily to 86 by the end of the day, 87. And by next week it hit 90. So keep those things in mind, that this is not a very volatile stock. It doesn't move a whole lot, but it is a pretty good trade, because if we were to compare this, right, to the behavior, and now we're just dealing with a different sector, this is what you get. Remember when we've talked about this, buying the dip right here. So Micron, FedEx, sees similar response in FedEx initially. It drops right at the earnings. They pick it up right away, and what appears to be, oh man, it's high at 157. Well, it's no longer appearing high when it hits a level of 164 yesterday, right? So we could be going into this similar type of setup with Nike. Basically, what appears to be, oh, they bought the dip, maybe it's done running at 83. Well, when it trades at 90 next week, or 88, I mean, all of a sudden you're like, whoa, why didn't I just do it? Why didn't I pull the trigger? Now, the most important part of this is, the reason we're using these specific examples is, well, number one, they're heavily traded by institutional investors, both Micron and Nike. Both of them were supposed to get severely impacted by the China situation, and they are not. And that is the most important thing. We get two huge names reporting earnings back to back. And in both names, even though they're in different sectors, they're buying the hell out of the dip, and they're doing it when these both companies, well, actually Micron had an exceptional earnings report, but in case of Nike, it's not the stellar report. They missed the earnings estimates, and they still buying the stock. So the most important thing is, clearly, there's a lot of other retailers that manufacture stuff in China still. And, if there's any further tariff increases, I mean, these companies could be severely hurt. So by the reaction in Nike, it basically tells us, hey, don't worry, everything's going to be okay. Otherwise, they wouldn't be buying this thing on the dip on such a huge volume. So this is how Nike chart actually looks. Surprise. Man, look at this. Reverse head and shoulder is just omnipresent in every chart you guys look at. This reverse head and shoulder is there, and we shouldn't be getting the same chart pattern in a variety of sectors. So typically you have one sector selling off while another one is climbing higher. But look, all the charts I'm showing you guys the last week or two, they all drawing these reverse head and shoulders. And so this is what was happening to Nike going into the earnings report. You see this red 3 candles back to back to back. Well, that was the fear that the number in Nike was going to be so bad that, the concerns about China were going to be justified. Well, it reports the earnings. They buy the dip because clearly there's nothing to be worried about there. Definitely not to the magnitude that anybody would fear. So now that the fear is gone, the stock is likely to revisit these levels right here of 86, 87, and give it a little bit longer time, it could easily revisit the highs of 90. That's where we're coming up with our target prices of 86 to 90 bucks, depending on what time frame you're considering. Okay, the crazy thing about Boeing that was mentioned, so it drops 30 bucks, it climbs back, almost 25, and a lot of times on bad news, when companies do that, this would be a good level to actually come in and short it. Well, it maintains that level. It doesn't drop. So, after that, it goes up, down a couple of dollars here, but overall, finishes in the 360s handle, which is huge. When you get something like this, I mean, typically in this setup, in a market that is really making up its mind how bad things are and it's about to drop, you would not see a stock hold this level so well. They're buying the dip and they're holding the level, which tells you institutions overall. Now we're talking about Boeing, right? It's a different sector. That overall, they're pretty much inclined to buy any sector on the dip, on any kind of dip, even on the bad news. So I think, it's important to understand that if institutions' predominant behavior is buying the dip no matter what kind of news are rolling out, then it's not the time to be buying puts in the expectation of a crash or a drop. This is actually the time to be buying calls. So yesterday we've placed this note in the slide saying, hey, financials and the tech begin to participate, move higher, could accelerate, and it could be huge. So we've used Goldman Sachs as an example. We've referenced, hey, what if Goldman Sachs starts going to like a level of 205, 207.5? That sure would get the financial sector going, and would get Amazon to finally participate. Guys, this is a recipe for hitting all-time records, okay? And the charts are telling us, we have examined this yesterday. This is what happens today. Actually, if you look at Goldman Sachs, this morning, it's hitting this level of 205. So it clearly tells us that we're on the right track here, that what we've said yesterday is already materializing today, and the financials are clearly beginning to participate in this rally. So at this point, maybe we can get Goldman Sachs to break above that 207.5, maybe revisit the old levels of 220, because that's where the next level of resistance actually is going to be. So again, focus, guys, focus. I'm going to show you this one more time. This is what is just ahead of us right here. This is specifically what we're expecting. We're expecting some big white candles, not without some profit taken in the middle there. So that's why you got to collect some profits when the market rockets higher, sell half of the positions, get back in on any kind of pullback, because they are going to be buying these pullbacks. And overall, we could have the markets do this by the end of summer. Okay, big move coming out of the trading tunnel. We've talked about that. We've also talked yesterday about how yesterday we're expecting to move from that lower trading range of the tunnel, which was basically this level of 29.20, to start moving towards the upper part of the trading tunnel. That is exactly what we got. And so basically, to me, the way I am picturing this and viewing this is, this is the beginning. What we've had yesterday, represented by these bullish move 7, with clear characteristics of buying the dip behavior. This is the beginning of what is going to be a 100-point move higher. And a 100-point move higher could happen Monday. A 100-point move higher could happen by the end of next week. But overall, everything is pointing to a move higher. Without me even drawing, which I think I do have a drawing of this, what do you guys see? It's the same thing. Like, it's the reverse head and shoulder. So when you're looking at charts, I had somebody ask me a question, well, how do you, come up with, the trades and how you get in there? Guys, when I look at something, I look at it in the form of a chart pattern. So I clearly can just look at something and say, okay, this is what's going on here, here, here. It makes my job as a trader a lot easier. So if you're not able to look at the chart and picture the way, in a meaningful way where you can get a reading of what is about to happen next, and you guys really need to review the chart's divergency scores. You need to review the chart's patterns part of the course. You have never taken the course, you need to just take action. Go to tradingoptionslive.com, click on the charts divergency scores. Guys, don't wait, because this time in the markets over the next few months is going to be absolutely insane, because we're going to get that round trip trade. It doesn't happen very often when markets go to all-time historic highs and then they stage a classic drop. It's going to be a thing of beauty. It's going to be a masterpiece, and trust me, you're going to do a lot better, because I'm not there to babysit every single one of you and tell you, hey, buy now, get out now. Like, you guys got to do that for yourself. And I promise you, your job is going to be a lot easier if you're going to start looking at these charts, because the idea of these charts is you can, when I'm trading, and for example, this is a 15-minute chart. If I'm looking at putting on a trade and I'm calculating exactly what I'm getting in or not, I'm going to get in and do a 1-minute chart. I'm going to look at that. I'm going to take a look at a 2-day, 2-minute chart. I'm going to take a look at a 4-day, 15-minute, 5-day, 5-minute, 10-day, 30-minute. I'm going to look at all these time frames. It's going to give me like the optimum ideas of when to get in, when to get out of these things. And then I'm going to go look at the 1 day, 1 minute chart. I'm going to 1 day, 30 multiple month chart, basically, where it gives me the data for 1 day. And I'm going to look at the weekly chart. So all of that stuff, guys, when you look at different time frames and you get consistent reading as far as the patterns, what's about to evolve, like, it's going to help you tremendously. So if you're not looking at least 30 charts a day, guys, you need to start doing that now. Don't waste your time. The earnings season is around the corner. It's going to help you make an insane amount of money if you know how to utilize this stuff. So June 27th was actually yesterday, and we had a market move 7. Market move 7 is a classic buy in the dip type behavior. This is how it actually represented in the chart. And if you see that, right, so this was when the market opened. So we did open slightly higher. We sold off. They bought the dip. We moved higher. We sold off again. They bought the dip again. We moved higher by the end of the day. So we opened higher, closed, finished higher for the rest of the day. But your story was told right here pre-market earlier, before the market opened, a couple hours before that, when the market actually went to this level and it sold off. Look what happened pre-market. When the market sold off, they immediately came in and they bought the dip. So there it is. Yesterday, we sent a message, hey, trade this as a move 7. So you guys would have known the move 7 is buy the intraday dips. Those were the perfect entries. And when you see and compare the VIX numbers when these intraday dips were happening, the VIX was at the highest level. We said, look, the probability is such that VIX is not going to break above that 16.53. There's 80% probability it's not going to do so. So when you see the VIX go there, those were your ultimate best entry points for the day. The 2-day sequence is 2-7. 2-7 is a very important sequence because it's really telling you a story that there is a potential trend reversal opportunity. As you know, that's where most of the money is made in the stock market, is not in the trend, but in the trend reversal. So we've basically transitioned from what? We basically transitioned from the behavior of the previous couple of days, where it's been predominantly move 2 type behavior, where the markets pop and drop, pop and drop, pop and drop, and they keep doing that intraday. And that's a move 2. Basically, you get in a series of lower highs throughout the day. Now, move 7 is exact opposite of that. So 2 and 7, exactly the opposite of each other, because here you get the behavior of buying the dip, okay? So dip, they buy. Dip, buy. So pop, drop versus buying the dip forms a TRO, a trend reversal opportunity. So when you see this transition, this could be your day 1 of a subsequent moves higher and higher from here. So you don't want to miss this. You want to start buying calls. Notice I didn't say just go all out and buy everything you can. Just start buying calls, and if you get a second day follow through confirmation of a higher day, add more. Just add more. Don't think about it. Sometimes, I've talked to a couple of you guys, you think too much. Just take damn action. Just do it. So 11-5-2-2-7 is the 5-day sequence. So clearly, after these sequence that resembles highly the sequence we've talked about earlier in the video, we're getting this reversal, the TRO reversal. And today is going to be an important day because we're going to see if it's actually going to hold. So TRO right here also represented, I mentioned earlier when I was showing you this chart earlier, guys, hey, what do you see? Well, you should have been able to see this, which is the reverse head and shoulder, right? The low being set at 29.14. And from there, you get a series of what? A higher low, high low 1, high low 2, 3, 4, 5, 6. So it tells you that there is a shift in the behavior from this pop, drop, pop, drop, pop, drop, pop, drop. All of a sudden you hit that low at 29.14, forms this reverse head and shoulder pattern, confirms by a switch in the trend of the behavior in the market. So this is critical, guys. If you learn to catch this, you're going to be able to catch some awesome trades out there. Okay, same thing that we were already observing that yesterday, right? So that was from yesterday's slide. We're seeing that coming, and it was confirmed. Consolidation before the breakout, basically a overall way to think about it. So the next market move, clearly, we're calculating 107 today. So buy the market at any kind of intraday dip today. because of the high probability of a move 11 on the Friday over the last 60 days, we're not discounting that probability, but we're assigning a higher probability. So maybe 70% of a move 1 to 7, 30% probability of a move 11. So by 10:30, we should be able to get an accurate reading on that. VIX fails above 16.53 again, so VIX is trapped. It did attempt, as you can see, it went to 16.4. It failed and it went lower, finished at the lowest level of the day. If we take a look at a 5-day chart of the VIX, the question is, can we consider this as a triple top formation? And I think the answer is yes. And if I'm correct on this, we should see the VIX to 1314 by Monday. Overall, it basically is going to confirm that the VIX is sideways. When VIX is sideways, under 16, what we want to do, guys, we want to buy calls in the money. So buy calls today, buy more calls on Monday, and be patient. Give yourself some more time on expirations. Buy intraday dips. It could be a great probability to move 7. So when this intraday move 7 happens, oftentimes, especially if we observe the behavior of the last few days, it would coincide with the VIX being at the highest level of the day, which would be specifically 16.4, 16.5, 16.6. If VIX gets there, you know that is your perfect entry on the call side. And there is a chance we think that investors could get excited today, and they're going to try to reclaim this level of 29.50 before the end of the day. So we're overall going super bullish into today. However, we're not neglecting the probability, which is a smaller probability of a move 11 because of the recent history. So with that said, guys, get ready. This is going to be a ton of fun. If you've been a trooper hanging in there, guys, it has not been easy few weeks lately. But look, you shouldn't be expecting every one of your trades to be easy. And trust me, we are fixing to get a ton of easy trades. So that is why you should get excited. Give yourself credit for hanging in there in this challenging market over the last few weeks. Easy times are just around the corner, so get ready to rock, make a ton of money, guys. I'll see you in tomorrow's video.